Okay, so I guess this is a panel about global macro. So I guess the first question I want to ask, is probably the question everyone wants to ask, is the Fed going to go in December?
Yeah.
Yes? Okay.
Yes.
Yeah, probably, yeah.
I thought you wanted disagreement on this. Yes.
Okay.
Yeah, that's like...
And I think one thing that I would say is, okay, so we're all kind of, I say yes. But one thing aside from that is, what do you think the market reaction is going to be? Because given, as I think we've kind of shown, it's kind of priced in, what do you think of the reaction?
In which asset class?
Well, firstly with the dollar, I would say.
I do think the dollar long trade is not necessarily over. But I think it's going to be a more volatile trade next year. I suppose it's pretty volatile this year for periods. But I think, there's been a lot of research out recently about how dollar normally starts going lower after the hiking cycle starts. I'm certainly not excited for the dollar trade. I guess the way I put it is that for me now, the easy part of the dollar trade is behind us. I mean, dollar went up 20%, between summer 2014 and the early part of this year. And the easy part of the trade is behind us, and therefore I prefer to stay away from it as opposed to being too excited to play it either way.
Yeah. Well, the risk reward I think definitely now is definitely less favourable than it was even a couple of weeks ago. And everyone's talking recently more about the dovish hike. It's going to be a dovish hike at best. When they go, even if they go in December, are they going to go in March, or are they going to wait 6 months or so? So I think what's in the price in the rates markets, they're not going to be at all. It's not really going to be that hawkish in any way. And I think the risk reward being long dollar isn't there at all. And if anything, we're going to see positional squeezes even on the day of the rate hike. I mean, last week or week before with the FOMC minutes, it was hawkish. Definitely set themselves up for December, but then the dollar sold off.
The only thing is the minutes that were quite old by then, because we'd already priced in way more than those minutes were for an earlier meeting.
So I'm still a bit more in favour of keeping the dollar trading. I mean, I don't have a particularly strong opinion on what might happen on the day of the announcement. I don't really tend to think of trading a day-to-day basis as some style that I'm interested in, but I think you're probably right that they will look to try and do a relatively dovish hike. Quite how dovish Yellen sounds in the press conference will probably be the kind of key determinant. That said, I think looking further ahead, I think that, on my view on the outlook, I think they are going to hike more rapidly than is priced into the market. And I think if you look at the other side of the trade, if you're looking against euro or yen, that we are going to see more easing coming from both the ECB and the BOJ. So for that reason, I think from the other side of the trade, as much as anything, I think it still works over a...
How many hikes do you think they do next year?
Including December?
Yeah.
3 or 4.
Okay. So I wouldn't see anything more than 2 really. 1 December, 1 mid next year, and then just sort of let it see how it goes down, and then look to do more in 2017. But mostly because with the next two of the next biggest economies massively easing, they're not going to want to create too much of a divergence. The divergence is already massively there, but they're not going to want to push it too far. So they're going to be incredibly dovish with their hawkishness.
Yeah, I mean, I just guess I have a slightly more bullish view on the US economy, perhaps, but I think that they would like to be in a position where clearly the initial response to that first hike is not disastrous, so they're not going to want to see a massive blowout in term premium. If they do, then I think you're probably right, they're more likely to then go slower. But that's kind of part of the management, if you like, of a dovish hike, is to control that kind of term premium response to the initial hike. I think the neutral rate is rising. I think the neutral real rate is rising, and I think that's what they think as well. And so they need to hike into that if that's the case. So one a quarter to me doesn't seem like an excessive pace. I think from a kind of trading perspective, from a market's perspective, the data that come out in Q1 are going to be disproportionately important to the market reaction. So there's no doubt that there's a perception amongst many market participants that basically the US economy will be killed by the first Fed hike. So there are enough people out there who think they'll be one and done. That all you need to see, I think, is a small rollover in Q1, which could be noisy data on payrolls, which is a joke indicator that the market focuses on, or a soft GDP print because of ridiculous seasonal factors or something, and that could be enough to see a big rally in rates again. So I'm concerned by being short, and long the dollar. But
the polar vortex could come back again for a third year in Q1. Yeah, I mean, I would agree. I think they'll go probably, I think 1.25. I think they'll have to pause somewhere along the way. I'm not sure where. My conviction is much lower about the Fed than it was a while ago because of everything that's happened since we last spoke 6 months ago. But our 12-month forecast for euro dollars, it's tad aggressive at 94. In fact, it's the lowest in the Reuters poll, so there you go. And I think we picked it because we said, oh, well, 95 is the lowest forecast. We'll go a penny lower. But I could see it because I think short term there's room for a short covering rally. We've seen, if you look at the spec positioning and the IMM data, the overall dollar net long against G10 has more than doubled in just 4 weeks. So I mean it's broadened out. So it's where it was very concentrated the euro earlier in the year. Now there's this decent position, short Aussie position, sterling position building up. Short yen has come back. That went away for a bit there. So I think you could have a bit of a dollar rally and EM rally, into the end of this month, just because it kind of depends. My more nuanced view on that is the fact that we've got a lot of long gamma, so options nerdy stuff, but basically it's been tough for euro dollar to get below 105. If that holds, that could be the trigger for a short covering bounce. If we get through that, then it could become a slipperier move towards parity. But I think more than likely you're going to get a short covering bounce into end of the year. EM's held up really well, even as the Fed started signaling liftoff. But these dollar cycles are big cycles, and everything in terms of policy divergence points into it being still a 6-7 year dollar cycle. We're still pretty early into it.
What do you mean by policy divergence?
Well, just that the Fed's hiking and the ECB is going to cut, pretty clearly next week. I'm not sure if they'll cut more next year. Kind of depends because they, as we talked about earlier, they are kind of soft targeting the currency. So it kind of depends on what euro does. I mean, so ironically, depending on how much the euro bounces, if there is a big short covering bounce, that could prompt the ECB to cut rates more, do more QE, because they do seem extremely sensitive to the currency. But the fact that you've got the central banks going in opposite directions, and I agree with Mick that I think the Fed could go more than the market's expecting, because inflation's holding up okay in the U.S. and the other kind of technical argument around this is that because of the demographic changes in the U.S. and labor force growth, the Fed has started to talk about this, but not too much, that you don't need 200,000 a month payroll gains for the unemployment rate to go down. Now, a couple of Fed officials have talked about that. So actually 120, 130 could be okay, and you could still get the unemployment rate going below 5%, down to 4.5 or lower. So I mean, that's, so if you get a blockbuster number like we had last month, if that continues for whatever reason, you could get a really sharp drop in the unemployment rate that then people may even start talking about the Fed being behind the curve.
Ashraf, we were talking about if you think the Fed will hike in December, and if not, when. So I don't know what your views are on that.
Since December 23rd of last year, in my 2015 preview, I said there's not going to be a rate hike, and I consistently was saying it's not going to happen. In May, I was feeling a bit iffy. I said, I'm finally going to be wrong. I had it in June, and they didn't. Yeah. And then in September, I said, before the September meeting, when the odds finally turned out of the blue and they were saying, oh, there is a chance that they will do it, we said no. Now, all the writing is in the wall. Maybe you should ask me this question after the NFP, if it matters. Does it matter or not? But I think, so what should they do, or what I think they will do?
Well, what do you think?
Right.
What do you think?
I think they should raise rates.
What
do I think? I think they should finally raise rates. Do I think they will? you know, the market is 70% saying yes, 30% no. I'll probably hang on to my hat and saying probably not, whatever that is worth. But it doesn't matter, that, you know, as far as a prediction, it matters what you just said. I just walked in, it's going to be a dovish rate hike. And there's many ways of saying that. It depends what the ECB is going to do. I don't think the ECB is going to expand QE, meaning they're not going to raise the quantity. I don't think there's no way they're going to do it. The German economy is doing okay. It's not about the German economy. Here's the thing, guys. I think it took them a while. It took a while for Draghi to wage the troops, to rally the troops, and to get them to agree over QE. When inflation was minus 0.6, now inflation is plus 0.2. Core CPI is higher, whatever it is worth. In IFO survey, 17-month high. Things are not that bad. Ukraine, Germany, Russian sanctions, the IFO, the CW is okay. Is it all about the CPI? If it's about the CPI is way higher. So, I know you asked me about the Fed, but we have to talk about the ECB first. When they will, I think they probably do a rate cut, will be a fast and a short-lived drop in the euro, probably testing 105, maybe 104.90, and then it's going to stabilize 105 because all eyes are going to be on the next day, NFP, and then the interpretation of the NFP, and then the NFP, what is it? There's a participation rate, there's hourly earnings, there's U6, U5, U7.